going into the past, I mean, because I was looking at some data points. If you look at the last 5 elections from 1999 till 2019, right? So almost 25 years, 5 different elections. And if you look at the data for markets, just 6 months before the election, that is the day of counting and announcing of results, right? So if the results are going to be in, say, May 24, you will look at it from November 23 to May 24. You go backwards, last 5 such elections, 99, 2004, 9, 14 and 19. Every 6 months prior to election, market is rallied. See, Surabhi, basically, your sectors are not so dependent on elections. You will have some few months here and there where elections decide the fortune of the sector. First of all, you should not build a portfolio for elections. You should have a portfolio before elections also, and after elections too.
Absolutely.
Maybe you can make some tweak here and
some
there, depending on your understanding of different sectors. So typically, if you notice, going into the election, governments are always very hyperactive on spending, be it infra or be it consumption, because they always want the consumer sentiments to be upbeat. Right? Infrastructure has been recovering after a long time. I mean to say the capex cycle. The private capex cycle, which has been very subdued for a large part of the last 7-8 years, has started recovering in the last 12-18 months, and which is why you've seen industrial stocks, stocks belonging to the infrastructure, capital goods, defense, those areas, they've already done phenomenally well in the last 12-18 months. So I wouldn't really hazard a guess as to which particular sector you should zero down on and then, market with the election brush that this is a sector for election and this is a sector for perpetual, sort of portfolio. I wouldn't do that. Yes, at the margin, you can say some of the infra spending will definitely get accelerated as you head into the election season. Also remember the fact that there are 4 state elections in November, December. Right? That will also see a lot of spending from government as well as the candidates who are fighting those elections. So a lot of money gets spent in all these elections, which ultimately trickles down to the bottom of the pyramid. Right? And we have seen in the past that because of the election spending, after some lag, you generally see consumption picking up. So infrastructure, consumption, these are 2 broad buckets where I would sort of say elections generally benefit. And then you have financials which are already on a roll. Banking has been a bit subdued. But do remember that in terms of corporate earnings, the banking, financials, NBFC and non-lending stocks have already done really well in the last 4-5 years. And this year also they're expected to do well on earnings.